Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we are going to be taking a look at the SCHD ETF and trying to determine if it really lives up to all the hype. SCHD seems to be one of the most popular ETFs among dividend investors these days, and investors are certainly putting their money where their mouth is. Total net assets for SCHD have grown from about $20 billion in March of 2021 to almost $45 billion less than 2 years later in December of 2022. If you don't know what it is, SCHD is the Charles Schwab US Dividend Equity ETF, and it's a low-cost ETF that invests in US dividend stocks and seeks to track the Dow Jones US Dividend 100 index. As such, it owns a basket of about 100 dividend stocks. As we can see on this page, SCHD has a pretty low expense ratio of only 0.06%, and I honestly couldn't ask for better from an ETF that has some sort of active management. Broad market index funds like VOO and VTI have expense ratios of 0.03%, so SCHD is barely more expensive than that. And it says here that it tracks an index which is focused on the quality and sustainability of dividends, and this is really key since many companies may have, a high dividend yield, but that yield isn't really sustainable for a variety of reasons. Or maybe the stock price has fallen a lot, which has increased the yield, and investors are just expecting the stock price to continue falling. This last line here is pretty significant as well. The ETF invests in stocks based on fundamental strength relative to their peers, which is determined based on financial ratios, and we'll talk a little bit about this later as well. But I like to see this because they don't just have strict rules about dividend yields or something like that, which could get investors into lots of trouble, like I mentioned just a minute ago. And one of the reasons that investors do love SCHD so much is because of the strong dividend yield and growth. Currently, we can see that the dividend yield is a bit over 3%, which for me is on the higher side of dividend yields. I think some people would consider that 3.3% to be, on average, or maybe even on the low side of dividend yields. But when we think of actual companies, I think anything higher than 3.5% or 4% in most cases probably isn't super sustainable. But going back to SCHD, another awesome part about the ETF is the dividend growth. We can see here that over the past 5 years, the dividend has grown by an average of 13.7% per year, and since the fund's inception in October of 2011, they have grown the dividend by double digits, over 10% every single year. So it's important to realize as well from looking at this chart that the dividends aren't super predictable, and they will fluctuate from quarter to quarter since the ETF is basically just passing on the dividends that they receive from the companies they own. But over time, we can see the trend is definitely very strongly in the upward direction, and it's increasing pretty quickly. Not only is the dividend and dividend growth very strong, the total returns of SCHD are quite impressive as well. As we can see from these charts here, SCHD has outperformed both the S&P 500 and Dow Jones Industrial Average since October of 2011 when the fund was created. Although SCHD hasn't outperformed the NASDAQ, I think the NASDAQ is a bit of an outlier there for sure. Certainly an unprecedented run, I think, in the past 10 years or so for that index. And when we think about who would invest in SCHD versus the NASDAQ, I think an investor in SCHD would certainly have much different goals than someone that's investing in the NASDAQ. So although SCHD has performed fantastically in the past through metrics like the dividend yield, the dividend growth, and total returns that we've talked about so far, we want to look at some fundamental metrics as well, because if SCHD doesn't do that well in the future, that's a problem if we were to invest in the ETF right now. So we want to, pretty much be able to understand, are these returns and dividend growth likely to continue? So from this screenshot, we can see that the average market cap of companies in SCHD is over $100 billion. This is generally good, I think, because it means that companies that SCHD invests in are relatively established. But this also means on the downside that there probably won't be tons of growth in the share price of these companies over the next few years. But SCHD definitely isn't really geared for those who are looking for, hyper growth, I would say. So I think that's completely fine. Additionally, the average PE ratio of companies that SCHD owns is 13.4 right now. I'm not really sure if this is a weighted average or not, but I don't think it would really matter all that much because SCHD isn't super heavily weighted in any one stock or any one group of stocks, as we'll see a little bit later on. And another metric on this screen that I like to see is the return on equity, which is 35%. That is a pretty awesome number, I think, and it shows that the companies that SCHD owns are continuing to grow their earnings fairly well despite their large size. So now let's take a look at some of the stocks in their portfolio. We can first look at this sector allocation right here, and we can see that their largest sector is information technology, followed by financials, consumer staples, healthcare, and industrials that are all above 10%. And then you can see the rest of the sectors there. And I like these sectors a lot because generally they have fairly decent dividend growth rates. And we can see some other sectors that generally speaking have lower dividend growth rates and higher starting dividend yields. And some of these sectors are communication services, energies, and utilities. And we can see that SCHD has pretty low and minimal allocations to those specific sectors, which I like to see because I think of SCHD as more of a dividend growth ETF and definitely focused on the dividend growth aspect of it rather than just the current dividend per se. And we can also look at the chart here of top 10 holdings, and we can see the largest holding is Merck at about 4.5%. And going down the list, all these companies I would say are super high quality. Some of the ones I like specifically are Home Depot, Broadcom, Texas Instruments, Pepsi, and Lockheed Martin. I think those are just especially outstanding, I would say. And then we can also see something interesting in that their top 10 companies are generally about equally allocated, all having about 4% allocation. And I kind of like this because they're not, super concentrated in just, one or two or four stocks per se, which some index funds tend to get that way, it seems. And one of the things as well that I personally like about CHD is that of the top 10 holdings, I only own 3 of them in my individual dividend portfolio. So if I were to invest in SCHD, this would give me some other exposure to other dividend companies that I think they're very high quality, but I just don't have them in my portfolio at this point. So if I were to invest in SCHD, I would get some exposure to those companies. There's certainly no denying that SCHD is a fantastic dividend ETF. Not only does it yield over 3%, it has grown its dividend at a double-digit rate on average since inception in 2011. It has also beaten the S&P 500 and Dow Jones in that time period. Although I don't own SCHD in any of my portfolios, I can see why a lot of investors are attracted to it, and I can see the hype in there. It's really an exciting ETF, I think, but it really just doesn't fit with my investing style. I kind of have these long-term portfolios that are just kind of focused on index funds where I just kind of put money there and forget about it. And then I also have my dividend portfolio where I'm kind of more active and invest specifically in dividend stocks. And for that specific dividend stock investing, I like having the control to be able to decide which stocks I buy and when I buy them. And buying an ETF like SCHD kind of takes that control away from me and kind of puts that decision making up an abstraction level from me. But if someday I want to make my dividend portfolio more passive, I think SCHD would be a great option for that. And I think SCHD would be a great option for anyone that is interested in investing specifically in dividend stocks, but wants to make it passive and not put all that much time or effort into it. Certainly do your own research into the ETF and make that decision for yourself. But like I said, I think it would be a good option for a lot of people. I would love to hear everyone's thoughts about SCHD in the comments below, especially if you disagree with something I said in the video and want to tell me why I'm wrong and you're right. I love hearing opposing feedback for sure. And make sure to subscribe to the channel if you haven't already. Thanks for watching, and I'll see you all in the next one.